Hi, everybody. This is Hyperwave. Oh, Thor is, stretch. Okay. All right. Thank you, Thor. So now
Hi,
I have a
Thor.
co-host. Well, everybody, we've missed you. I know it's been a bit of a delay, but we have announcements. Today, we're going to look at Bitcoin. Spoiler, it's not all that exciting, but we'll explain why. We're going to look at the United States stock market, which is very exciting. That we're going to explain why. And with that said, Thor, what do you think? We should hand it over? Yeah, I think so. All right, Tyler, what's up?
Great. Thank you, Leah. Thank you, everybody. I also apologize. We haven't been doing too many things in terms of vlogs because we've been working out a number of new programs. We don't have enough time on the vlogs to get into details such as Consensio and Hyperwave and Selgen and some of these other tools that we use and people want to know a lot more about. And it's difficult to go back through 6 or 8 or 10 vlogs, find the right ones to understand what's going on. So Lee and I have been working on being able to do some new programs, and we're going to announce those here at the beginning of this show, which is something we usually don't do. But there's a bunch of changes going on with Lucid Funds, Lucid Investment Strategies, and our Hyperwave channel. We are working on a brand new website that will take a couple of months to get up and going, but it will be able to accomplish a lot of the things I'm about to tell you that we are going to do. So that's all in the works. And the biggest reason for all of this is a personal one on my side, having to do with about 3 or 4 days out of each week, I've got a full-time job that I love dearly, but it takes a tremendous amount of time and makes it difficult for Leah and I to be able to do these daily sort of shows. That ends in about a week. And from here on out, will be devoting 100% of my time to the Hyperwave channel and to doing as much teaching as we can about some of the subjects that we have talked about in the past. So with that in mind, the first step in this process is going to be to begin launching webinars that will last approximately 3 hours. And we will probably do one every couple of weeks on a different subject. The first one we are going to do is going to be on October the 12th, which is a Friday, a couple of weeks away at 3 o'clock. So it's going to run from 3 o'clock to 6 o'clock Eastern time. And the entire subject is going to be Consensio. So we will spend 3 hours going to great detail of how to use it, when not to use it, what kind of parameters to use in terms of moving averages, how you position yourself for the possibility of a trend change, both from up to down and from down to up in terms of moving money into and out of positions. So it will be very thorough. It's going to take us another week or 10 days to put all the material together. We are going to charge a fee for attending these seminars, which brings us to a second point that ties in with the first one, which is that we have started, as some of you know, a consulting service where we work one-on-one with you about specific questions and advice you might need or want from us about your portfolios. Not only the crypto portfolios, when to buy, when to sell, what we think, but also traditional portfolios running the gamut from retirement accounts to trading accounts, to traditional markets, to international markets, to currency markets, to commodity markets, to option markets. And we've only talked about that on a couple of occasions because we really didn't have the capacity to make it a full-blown program. And we were very gratefully overwhelmed with people that have asked us for that relationship. But we've slowed that down mainly because of the amount of time that I can devote to it. But now, starting next week, we can devote a lot more time to it. And we are building the software and the hardware and the back office to be able to support all of that. Okay, I'm sorry to go on and on about all of this, but I just want you to understand what Leah and I are about right now. And one of the things we are going to do, and we will talk about it in each of these vlogs, which will hopefully come to you on a daily basis now on different topics, but mainly exactly what's going on in the Bitcoin market, the crypto market, and the traditional markets. And we will reserve the teaching part of what we do for these webinars. And we'll explain how to get into it and all of that. But for now, for the next couple of weeks, anyone that is interested in finding out more about these webinars, and particularly the next one on Consensio, just go to our website, which is lucidfunds.com, and just go to the submission page and just say, I am interested, or I might be interested, or I'd like to learn more about your webinar on October the 12th on the Consensio subject. And then we will give you more information at that point. The second thing I wanted to stress is we have decided that we can take 60 more consulting relationships than we now have because of the amount of free time that I will have from this point going forward. We believe that we will get those 60 within probably the next 60 days, just from what has happened over the last 60 days. And at that point, we're going to have to cut off that program until we've built a much bigger infrastructure to be able to handle more business than that. Now, the reason I'm talking to you specifically about the consulting relationship, and I won't go into the details of how it works, but once again, all you do is go to our website, lucidfunds.com, go to the submission page and say, I would be interested in not only the webinar, if you're interested in the webinar, but also in the consulting relationship. Could you send me more information? And you will get that immediately from Leah, who takes care of all of that for us. So the reason I'm tying those two things together is whatever.
Hey, Tyler, we lost your mic. So Ali sets up, yeah, so we're super excited. So they will be virtual webinars. There we go. Ty?
Yeah, can you hear me?
Yes, we can.
Okay, great. Yeah, as Leah was saying, these are virtual webinars. There are a limited number of seats available, at least initially. We will see how that all goes. And we will be charging $150 for that 3-hour webinar. However, anyone that is a consulting client of ours, that will be discounted by 50%, 50%, which hopefully will give some people that were thinking about the consulting relationship a little more incentive to go ahead and go through the entire webinar process. We assure you, you will learn a tremendous amount. We will do other ones on Hyperwave specifically, teaching you exactly how those calculations are done in great detail. We will do other ones on the Celgene trading system and on many others. And if you are a consulting client, all of those webinars will all be discounted for you. We think that even the amount we're starting with for the 3-hour seminar will be very well worth the money. And we hope that a lot of you agree with that. Okay, enough with the advertisements, except for one other one, which is that Leah is about to embark on another very, very interesting journey in Bitcoin land with some of the top women in the Bitcoin space. And to me, this is very exciting because everyone knows there's only about 3 or 4% of all crypto people, Bitcoin people specifically, but crypto people in general, that are of the female species. And that's silly. It's crazy. It's nuts. And I just want Leah to give you a little background about these remarkable women that are getting together in Palm Springs out in California next week. So Leah, just tell us a little bit about it.
Oh, okay. Wow, a lot of feedback. Sorry about that. It's really cool. It's called Crypto Springs. It is actually open to anyone because they're gender neutral. But yes, it's like I think 99.9% women going right now. Their tagline, which I love, is "Cut through the Wen Lambo hype and join us for the real deal." So you get Elizabeth Stark, who I'm a huge fan of, obviously founder and CEO of Lightning Labs. Stacey Herbert's going to be there, which people know her from, Max and Stacey the Kaiser Report, but she actually is also with Heisenberg Capital. You have Meltem, who's CoinShares. You have just, Jess Verrilli, who's a GPA at Google Ventures. I mean, Amber Baldet is going to be there, right? She just launched Clover. But Ariana Simpson, I mean, loads of really, really awesome people. And we will be in Palm Springs for 2 days having a lot of fun together. So for any other women in this space, as well as men, you are welcome to apply. And there will probably be another announcement that I make on it, but it's going to be a lot of good fun. So get to hang out with some really, really fantastic women that I'm excited to speak to. And I'm just going to say I'm a huge fan of Elizabeth Stark. We've been talking, so I'm excited to hang out with her. So thanks, Ty. And I guess off we go on Bitcoin.
Great, very good. I'm going to go right to screen share. And what we are going to be looking at is the same old stuff. One of the reasons I have not been coming on a lot to talk about it is nothing has changed. And what I mean by that is, and I want to make a couple of comments about that. We're getting a lot of people on our Twitter saying the only time I come on is when prices are going down. And that's exactly right, ever since last December, because prices don't go up. Now, people have been irritated that I say prices aren't going up, where you get these movements from bottom to top, bottom to top, bottom to top, that are actually pretty big movements. And for speculators and gamblers and people that don't mind trying to make money opposite a major trend, they're perfectly fine. It's just that I'm not interested in them, and I am not interested in putting any of my clients in them. I don't want to buy in a downtrend. And a downtrend is what we have seen since December the 26th all the way till today. And if I am correct, what we will see for the next 6 months. That's an assumption about the future. That is not an assumption about the past. My rule is, in a downtrend, you sell on strength. That means all these things that people are getting excited about as we're going up, to me, are selling opportunities. They were not buying opportunities. We have not had a buying opportunity since late last fall. in my opinion, the way I look at markets. Therefore, this chart has become uninteresting to me. It will become very interesting when we take out the 5,800 to 6,200 lows, which we keep attempting to do. So the reason I start tweeting as prices begin to get down to that area is I'm sending up a flare to everyone that's listening to us saying, be on your toes. Things might happen here. The things that I'm interested in have nothing to do with little pops in the price. They have to do with the entire collapse of the crypto space. That's the big news. These little pops are not the big news. This is a downtrend. It continues. Okay, so that's just a little clarification of my timing of when I do these reviews of Bitcoin prices. We're then going to move on to the traditional US stock market. As all of you know, I've been saying over and over again that I am uninterested in the long side owning any crypto or Bitcoin until we have seen evidence of a bottom. The flip side is we've got a lot of things going on in the traditional markets in the US stock market, and one of the more important things just happened about 30 minutes ago, and we will talk about that, and I'm going to pull up 8 charts of the traditional markets just to reaffirm how strong they are and why people need to be in those markets and not in these markets, meaning the Bitcoin crypto market at this point in time. Don't tell me what to buy. Tell me when to buy it. And let's take a look at all of the noise that we've been seeing in this market, the Bitcoin market. When you look at the entire hyperwave, which started back here with a phase 1, accelerated into a phase 2 that we're looking at right now, and we'll look at it in just a minute, up into a phase 3, and then finally the phase 4, which is always the last phase of a hyperwave, every hyperwave. Then you get a crash, then you get a recovery. Now, Tone likes to look at this as this is the crash and this is the recovery. I do not, because off of a phase 4 break, this is the phase 4, the immediate drop is the phase 5. It can be in one candle, often it's in 2 or 3, but it comes immediately after the break of phase 4. And that begins the phase 7 down move, but it's made up of a 5 and a 6 before it moves into the 7. So in any case, this is the hyperwave of Bitcoin, still in a phase 7, still going down. Now, it is true that we are getting very close to a couple of very interesting things happening on this chart. So as we get closer to this horizontal line, which is the bottoms of all of these previous moves down, as we get closer to this line, I get very interested in what's about to happen, because on each of these touches going all the way back, we're getting closer and closer to this line, which is the phase 2 hyperwave line. And now, if you come out here to December the 9th of this year, these two lines are going to cross. What that means to me is if we don't break down below the lows at 5,800 approximately before December the 9th, the phase 2 line is going to become predominant above this bottom of the triangle that everybody is looking at. There will be a more important line, which is this phase 2 line after December the 9th. Until that, we're in a very dangerous position in terms of hyperwave. because if we break down below this line on a weekly closing basis, we will go to 1,000, as you've heard me say 100 times since last December. But there is a 1 in 5 probability or possibility that that phase 2 line will hold the price. I don't believe it will hold it intra-week once we break through 6,000 and 5,800. We're too close to it now. I believe we go right down through it. But I also believe that by the end of that week, whichever week it is, it could be a week from now, it could be this week, it could be 5 weeks from now, or as I said, it might not be until December the 9th. But at some point, the price is going to touch that line. Let's assume it does it in the next week, this week, next week, or the next week. I think that's possible, maybe even probable. But we might get some more little bounces. Each bounce is smaller than the one before, and one of two things will happen with that kind of a formation. Either we will go to a higher bounce than this one, or this one, or this one, or this one, or this one. We'll either go to a higher one, in which case I will come to different conclusions than I have held up until today, or more probably we won't. We will break down through the 5,800 to 6,000, which means automatically we're going to break down through my phase 2 line. Now, we know that tone has got a very important line at 49.75. And just as an aside, anybody that didn't listen to Tone's midnight show last night, his time, 1 o'clock, or 2 o'clock in the morning, needs to. It's one of the more important training videos I have ever watched about his sequential system, breaking down the wild activity of yesterday's price action. But you need to watch him go through the daily, the hourly, the 4-hour, the 12-hour, all the way down to the 30-minute, the 15-minute, the 5-minute, and the 1 minute to really get the essence of the skill that Tone is bringing to the interpretation of the sequential trading system. It was absolutely brilliant. I will watch it 5 times in the next week just to understand all of the nuances that he covered in about a 30 or 45-minute presentation. He gave away a lot of his secrets last night, and he's probably going to be upset that I'm telling you that, but you have to pay a fairly significant amount of money to learn that system when you go to one of Tone's seminars, and it's worth every penny of it, in my opinion, but you got a lot of it for free last night. So if you go back to his video from last night and listen carefully and take notes, you're going to learn a great deal. Okay, back to Hyperwave, back to the phase 2 line. Tone has got a line down at 49.75 that I believe when we break the 6,000 area, we will at least touch. We'll break down all the way to 5,000, maybe touch the Fibonacci line at 4,800. And then I believe on that same week, depending on when that occurs, we will run back up and close above my phase 2 line. From then on, I'm not going to guess what's going to happen. I'm hoping that's what happens, because if it doesn't, if we can't get back above this phase 2 line, in my interpretation of Hyperwave, we're going all the way back down to 1,000. If we can't close above it on a weekly closing basis. That's why I'm so interested in all of these little bounces and where we are, and I'm totally uninterested in these little pops. So when you hear me come on with a lot of tweets, that means we're getting close, in my estimation, of breaking down once again, so be on your toes, because things will start happening very quickly when that occurs. Okay, I'm going to go back and just quickly go through the way I look at major trends, which is on a weekly basis. I stop with the stop and reverse points on a weekly trend, very negative, and we've got to be up close to 8,200, 8,300 in order to break that string of 6 weeks in a row now to the downside. That is negative. The Bollinger Bands are clearly negative. We couldn't get above the middle line on a full candle closing basis. We tested it here, couldn't even hold it for a day. And now we're halfway in between the middle line, which is moving down. The upper line is moving down sharply, which will be great at some point in the future, being able to get back up to it. But right now, the target is dropping back below the lower line, which is right around my phase 2 line right now, which is another reason I think we're getting close once again to possibly breaking that down. I look at that as negative. If we look at the moving averages, the first thing I'm going to do is I'm going to take the price away. This is what you're going to learn in our seminar in terms of consensio, what these lines are telling you at any point in time. And it doesn't matter if you're looking at Bitcoin, the US stock market, Tilray, the marijuana stock, the Turkish lira. It doesn't matter. These lines are telling a story. And the story these lines are telling you is all the way up to the top. You were in an uptrend. Ever since that, you've been in a downtrend, and the downtrend persists right through all the noise yesterday and today. Why? Because the moving averages, the long term is above the intermediate term, which is above the short term, and they're all moving down. The short term popped yesterday because the price popped yesterday, but we're still in a major bear market according to these, which are the three that I use in Consensio, which are the 2 period, 7 period, and 30 period moving averages. And in this case, they are weekly, which translates, once again, because they're weekly, into approximately a 14-day moving average, a 50-day moving average, and a 200-day moving average. But if I'm talking about 200 period moving averages, I don't do that. That only applies to the weekly moving averages. Okay, let me just put the price back on so you know what we're talking about is Bitcoin, and there it is. Just once again illustrating the downtrend. Has not changed at all. No reason to get excited. Nothing to see here, folks. Please move on. Okay, let's take a look at the RSI. Negative, below 50, hasn't gone oversold. That's 4 out of 4 of the majors, all showing negative. Here's the MACDs, still negative, even with all the noise yesterday. That's 5 out of 5. Visually, you can see we're in a downtrend. All of the technicals we've just gone over show that we're in a downtrend. Nothing has changed, but things are getting interesting because the phase 2 line keeps grinding its way higher. And that's a very important concept that we will go over when we do our Hyperwave webinars. Okay, enough of that. I want to go to the markets that are in uptrends. This is where your money should be. This is where my clients' money has been for the last 10 years. We took a little bit off the table during this noise that lasted almost 9 months, but we've been fully invested for the last month. And the reason we have is because all the major averages, and I'm going to start with the NASDAQ. have been in strong uptrends out of this consolidation. Take a look at the moving averages. They're all moving up and they're all above each other. We're now looking at the total NASDAQ composite, which is made up of a couple of thousand stocks. And you can see what's been going on over the last 3 or 4 weeks. We've pulled back a little bit, but we hit all new time highs here, here, and here. Then we look at the NASDAQ 100. This is the 100 biggest stocks of that index we just looked at. This is where all the big tech stocks are. Again, here's the consolidation. We're looking at a 3-year chart, not a 10-year chart, just to give you a perspective of how powerful this thing is moving and why you need to be in it, because there's very little risk in it. And I will talk about the risk in just a second, because a lot of people on Twitter particularly have been saying, oh, great, this guy's telling you to get out of Bitcoin and the cryptos when they're at a bottom and telling you to buy the US stocks when they're at a top. Wrong and wrong. Bitcoin and cryptos are not at a bottom. They haven't been. They're going to drop another 80% from here. That's the greatest probability. What you're looking at now was not a top. We said it was not a top, and it keeps on going higher and it's accelerating. We easily, over the next 2 years, could go up another 80% in these indexes. We are not at a top here. We are not at a bottom. And I would never tell people to buy when you are at a top or sell when you are at a bottom. We let all of these tools tell us what the reality of the markets are. Okay, let's take a look at the S&P 500. This only 4 weeks ago broke to new highs. One of the reasons I was a little reluctant telling everybody to be 100% invested in US stocks, and I'm not talking about world stocks, I'm not talking about emerging markets, I'm not talking about European stocks, I'm not talking about Asian stocks, I'm talking about US stocks. This is the market you want to be in. It doesn't matter if you're a US citizen or a client anywhere else in the world. I'm putting all of our consulting clients, recommending to them that this is the market they should be in. And there are ways of doing that, even though you are not a US citizen. And depending on what country you live in, we can work out the details of that. We've already been able to do it for Latvia and Switzerland and Germany and the UK and Sweden and Hong Kong and China and Australia and New Zealand. But if you live in some other place, we will help you work out the details of how you can get access to these markets. Okay. So the S&P, remember the NASDAQ has 2,000 stocks in it. The NASDAQ 100 has got 100 stocks in it. The S&P 500 has 500, but it's a cap-weighted index, so it can be controlled by a small number of shares of very large companies. And I was worried that that's what was going on, but now we've broken out, and for 4 weeks in a row, we are above the January 22nd highs. That's very positive in the overall scheme of things. Now I want to take a look at small cap stocks. This is the Russell 2000. This is 2,000 small companies ranging in capitalization of 500 million at the small end to about 2 billion at the high end. Anything bigger than that is considered a mid-cap stock, all the way up to about $15 billion. And then you become large cap stocks at $15 billion all the way up to $1 trillion. Anything over $50 billion is really a super large cap, and there's indexes for that also. But here you're looking at 2,000 smaller companies. And notice that here it went through the same kind of correction back in January, February, and March, but that it went quickly to new highs. That was a very strong sign for me about the US market in general. Then after consolidation, it has recently gone to new all-time highs before this little pullback. If you follow tone in the sequential, you know that a number of these indexes are in a 1 to 4 period pullback. I think we're getting very close to the end of that because of something else that happened today, which is very important, which is that the Dow Jones Industrial Average finally, as of an hour ago, broke to all new time highs. Not showing up on this chart yet because I made this chart earlier before that occurred, but we did hit new all-time highs. The Dow is now up 204 points for the day. That was the last piece in the puzzle for me. Why? Because of this, which is the Dow Jones Transportation Index. The Dow Jones Transportation Index, which is made up of all the rails and the trucking companies and the shipping companies and the airlines, had broken to new highs all the way back here 5 weeks ago. But Dow Industrials had not. Remember, I just said that the Dow Industrials only broke to new highs an hour ago. Why does that make a difference to me? Well, you've heard me talk about Charles Dow and the Dow Theory about major market moves up or down. And we've been in a major market move for 10 years, but then we went into this 8 or 9 month period of consolidation. So it's important for Dow Theory when one of the two indexes, the transportations or the industrials, go to all new time highs, that the other one does also. Other words, if that doesn't happen, you get what's called a Dow non-confirmation, and that can be very dangerous, meaning that we could roll over and go the other way. I wasn't that worried about it because we'd already had the small cap, the NASDAQ, the S&P, and the Dow Transports breaking to new highs. Now we've got everybody on the same page. That means we are not at the end of a move. We are at the beginning of a move. You are buying the beginning of a major move in the US stock market. Okay, I wanted to cover one other thing, and that's for my group, which is the Hyperwave Research Group, which are 35 individuals that are just doing incredible work on studying hyperwaves. And there's a bit of a disagreement on this, which is Alphabet, which is the new Google, basically. Not the C shares, but this is the new Alphabet, it's called. And the question is it in a hyperwave and where is it? And we've got different people that really have begun to understand hyperwaves that are coming to different conclusions. And they asked me if I would throw in my 2 cents, which is the way our Hyperwave Research Group works, is I don't get really involved. I don't get involved with who's on it and what work they're doing. Everybody just has naturally ended up in this group thanks to about 4 or 5 people that are really running things. And from time to time, they'll ask me for my opinion, but I want them to be figuring out for themselves what they would do. And a lot of them are actually trading a lot of these hyperwaves from all over the world, using options and using even futures in some cases, and doing a lot of very creative things. But they're doing it on their own initiative until they ask me for my input. at which time I will do it. And that's what I'm doing right now, because this will be interesting, I think, for a lot of our listeners. This is the way I would draw. This is definitely in a hyperwave, but this is the way I would draw it. Some of our people are drawing it as a phase 4, and it could be, but I doubt it. I'm looking at this as a phase 3 in a hyperwave, with this being phase 1. Now, this is a fairly short phase 1. It only lasts, really, I would take it back to this point, which would basically be about late 08, early 09. I wouldn't take it back to this top, which some people are doing. I don't think it's necessary. I'm satisfied with a 1, 2, 3, 4 year kind of topping action, building up pressure that is released in a phase 2. And I would draw the phase 2 from below that phase 1 line. Now, I wouldn't be able to do that until this point, which comes after I'm drawing the phase 2 line, because at this point, we break through the phase 1 line. And then we pull back down to the phase 1 line. And now I've got a point at which I can start the phase 2. But I'm going to start it back here under the phase 1 line, using this touch point as my first touch on the phase line, other than my origination point, which then takes in these points in late 2015 and in the fall of 2016. And those 3 points are sufficient for me. And the angle that I'm seeing that phase 2 line going up, I'm saying that is a good phase 2 line. Now, it is clear that there has been an acceleration away from that phase 2 line. What isn't clear is has there been an acceleration up from that phase 3 line into a phase 4 line, and I don't believe there has been. I believe that we could drop all the way down to 1,050 approximately and still be in a phase 3. And I believe that would hold because it will be a touch point above this low. I know it looks like you should try to connect this point or this point with this point, but I don't believe that's what this correction was. Because remember, this correction is taking place during the correction in the NASDAQ market, January, February, and March. And this price action of Alphabet was just going along with that and didn't even make it down to this line. So I believe this line is still valid. I believe we're in a phase 3 for Alphabet. And that's my reading of the situation. Sorry I went into so much detail about some of these things, but I think it's all very important for all of us. And with that, I am going to go off of screen share, and I'm going to turn it over to Leah to see if we've got any questions.
Of course we do. So I'm going to be selfish. I want to hear about emerging markets. What do you think about Brazil and other emerging markets? You need to take this thing off. That's better. What do you think about Brazil and other emerging markets? Comparing the charts, it looks like they need to catch up to the United States. What's the probability of doing it soon?
It's a great question. And I am not ready to draw conclusions, but I believe the next major move we are going to take with our clients is to begin getting into the emerging markets. I'm not saying get into the emerging markets. I'm saying it's very logical, and the questionnaire is exactly right, that the space between the US market and the emerging markets has grown too extreme, in my opinion. And there's a lot of smarter people than me, like Mohammed Al-Arian, that is making the same observations, and a lot of strategists on Wall Street. I just think it's a little early to make that call. I would like to see Europe, first of all, get in line and begin following the US markets. They are not. There are no markets around the world in general that are following the US. The US is the engine. We've been pulling all these cars along for many, many months, and we're beginning to strain for the last 8 or 9 months until recently where we broke out. No one else is breaking out. I'd like to see the other developing countries break out, and at that point, I wouldn't be buying the developing countries. I would be buying the undeveloped countries. I would be buying the third world countries, the emerging markets. Why? Because the differential is not that great between Europe and the United States. We're up around 10%, they're up around 2%. But the emerging markets are down 10 or 20%, and we're up 10. That's a huge gap. I'd rather play that gap than with other major markets. Great question.
Italian banks are heavily into Turkey. Might that add to any collapse?
Yeah, absolutely. You don't know until a crisis begins, as it has in Italy and in Turkey and in Argentina and Venezuela, until it starts to happen. Everybody speculates it could happen, then all of a sudden it happens and it's too late. And then you find out, as Warren Buffett likes to say, when the tide goes out, you see who's standing around naked. And when a crisis begins, you can see where the problems are. You can see who owns what. The problem in the whole mortgage mess we got into in 07, 08, 09 is nobody understood how interrelated all of the insurance companies were with all of the big banks, with all of the brokerage firms, with all of government policy until the tide went out. And then it was too late because the tide's gone out, and you've got to know those things before. But absolutely, there are all kinds of interrelationships throughout the EU, and particularly in Southern Europe, with Greece, Portugal, Spain, Italy, in which there's interrelated problems that cannot be solved by the EU or by Germany if they all begin to come undone.
Thanks, Ty. All right, putting you on the spot, as I always do. Regarding news, and this is just coming from me, so like signing off on my the morning brief, we were discussing the AG's most recent statement. So bringing up the news, I would love to hear your thoughts on what the AG recently published about manipulation and their thoughts on certain crypto exchanges being not very good.
Yeah, I think it was a very important statement. But as Tone likes to say, and as I like to say, news does not change the direction of a market. In a strong market, bad news will be absorbed. In a weak market, good news will be absorbed. Neither will be changed by the news. It will be, yes, for a day, for maybe a week, but it will not change the overall direction. And the AG in New York is a great example. Leah and I have been saying in some of our fireside chats, in some of Leah's Medium articles, that the entire crypto space is rotten to the core. And we don't just talk about ICOs. We don't just talk about altcoins. We have been talking over and over again about exchanges, about mining firms, about the trustworthiness of wallets, about the trustworthiness of the data supplied by all of those groups. I have said that I won't touch any of those, including Bitcoin, until the crypto space is cleaned up, either through regulation or through market forces. Regulation has not cleaned up any of it. Market forces have been cleaning it up since last December. Market forces will clean it up all the way down to as low as it needs to go to wipe out all of the corruption in the exchanges, the mining companies, the data providers, and on, besides what we keep talking about with altcoins and ICOs. Now, what happens with news items, such as the SEC beginning to turn down ETF proposals, or the SEC having members begin to make statements about the validity of ICOs and altcoins relative to security law, or the AG beginning to make comments about the exchanges. All of those are news items after the fact. Why do I say that? Because we've been talking about all of that for a year. That's not a news item. The news items are just catching up with the reality of what people on the inside should know by studying the fundamentals of this asset class. And anyone that denies all of those fundamentals are simply pumping their own books. They're not being fair to you as a listener. We try to be fair by pointing out what is wrong with the fundamentals, and then when the regulators and others get involved with news items, great. Now they're on our side, and hopefully that'll help clean up the messes.
Thanks, Ty. I'm going to keep putting you on the spot. And people, I did just get a question, but I'm going to put you on one more while I read your question. HODL BTC. So I don't know if you had a chance to read through the Ugly Old Goat latest article that I sent.
Yes.
Great. I know you always do. So then generally, I guess I'll ask you, what do you think about Ugly Old Goat's latest? And yes, Ugly, if you're watching, you're coming on our show soon. But specifically what I thought interesting, and maybe because I was in the piece, is his thoughts on the fact that you really can't no trading while traveling. And obviously, Ty, you're a money manager, but for the listeners and everything, or being an investment manager, do you agree with Ugly Old Goat statement of how difficult it is to follow the markets when you're not able to be by your computer 24/7?
Well, not if you're an investor, but that's not what he's talking about. He's basically talking about being a swing trader, which falls into categories that he even has pointed out, and I think he's correct, is the difference between a speculator and a gambler and a swing trader. You can't do many of those things if you're not glued to your set. I can be gone for a month, and I can be out of contact because of the way I invest money, which is I'm only concerned about long-term trends. So if I can check in once a week and just get a quick look at 3 Consensio lines, that's all I need. Now I'm good for another month. But that's a very different type of a thing. So I agree completely with him, and it gets more and more difficult. It's one reason Tone does not trade. There's no way he can with his schedule. I don't want to. I have done all of that over many, many years. I've been a commodity pool operator. I've run hedge funds, and I've traded my account very, very aggressively with multiple very large 6-foot screens in front of me, and I'm trading down to the minute in commodities and options and everything else. That's behind me. I'm not interested in that anymore. It was fun and exciting, and you can make a lot of money and lose a lot of money, but that's not where my clients are or where I am. But I agree. Now, Ugly Old Goat also came out with another very interesting medium article this morning, and I'm not sure if that, I think you were talking about the one from yesterday. The one this morning had to do with what I've just been talking about, the exchanges and being able to trust the data. And I loved it's a great article, but I hadn't heard him say this before in terms of being able to trust the data in this crypto space. And he was basically talking about commodities and being able to rely on the reports that you couldn't do 40 years ago because they only came out very infrequently. But he's bolstering the non-crypto exchanges like the CME and others because how valuable their reports are on net longs, net shorts, open positions, who each of those players are in terms of speculators and in terms of producers. And he's making some great points. I bring it back to what I just said about I don't feel that same sort of comfort with anything going on in the crypto space when I get data. And I've even commented about Willy Woo. I don't have the same confidence in the numbers that he is getting to draw his conclusions. I don't get the same confidence when looking at net longs and net shorts that Tone is looking at and wondering why the numbers don't seem to add up. My answer to both of those people are that I don't trust the numbers coming out of this space. I do trust the numbers coming out of the traditional spaces from exchanges because they've gone for 100 years perfecting that, and they're infinitely larger than what we're talking about in this little brand new space with a bunch of people running around anonymously, building things anonymously, putting money anonymously, creating their own accounts anonymously, creating their own mining companies' money anonymously. I can't trust any of that. Some of it might be valid, but I am not in a position to tell which is which. So I would ask people to read both of Ugly Old Goat's last two very interesting articles.
Ugly, you're the best. I like this one because we haven't talked about politics in too long. And yes, I'm in Washington, D.C. Everybody knows that. How would you value and I've been tweeting tweet storms about this, so we'll see how much we agree, disagree. All right. How much do you value the various trade agreements in the entire globe, EU, China, EU, Canada, United States, China, including it's saying enemies? Wow. So I'm going to leave that one more blanket there. I hope, live viewer, that's okay with you. How do you value these different trade agreements between allies as well as between quote unquote enemies? It's rephrased.
Yeah, that would take hours and hours and hours to discuss. But let me just say this. There was a problem, there is a problem between trade agreements between the United States and everybody else. And that is nobody's fault, that's everybody's fault, up to the time that Donald Trump took over. He is not doing anything new that everybody before him would have wanted to do, but simply politically found it infeasible to do for whatever reason. Nobody wanted to touch it. Nobody did touch it. And the U.S. For many, many years has been supporting everybody else and has been hurting our own people. And somebody has come along and said, enough is enough. I will do whatever it takes to change that. And he's doing it in a way that most people wouldn't do it in. And so far, it's been kind of effective. I believe it will be effective. But that we will wait and see. We will wait and see what's happening. I appreciate the fact that somebody is going against everybody else and all political correctness and doing what is necessary, because everybody understands how serious the problem has been with China, particularly in terms of stealing our resources. intellectual resources, human resources, corporate secrets, corporate governance, on and on and on. And if it wasn't for that, we wouldn't be having these fights with everybody else. But since that is such a big elephant in the room, Donald Trump said, okay, we're going to go after the biggest problem. We might as well clean up everything else too. And in his mind, everything else is a bunch of countries getting together and voting all together against the United States, and the United States not being able to do anything against it. He would rather do it one-on-one. Let's sit across the table. Let's come to an agreement. He did that with Mexico. He's trying to do that now with Canada. He'll try to do it with every one of our allies that he cherishes greatly, country by country, not institution, global institution by global institution. We will see how that all works out. But the original question is, how would I evaluate it? And my answer is, look at the markets. Always go back to price. Forget politics. Forget religion. Forget social experimentation. Look at the markets if you want to see the world's evaluation of what is going on with everything, including trade. What's happening to the Chinese market compared to what's happening to the US markets? Even with all of the problems that are surfacing having to do with trade, we've gone through all of the charts to explain right up through this morning how the world is voting on the economic activity in the United States, including trade.
Thanks, Ty. All right, I think we'll end it there. And I guess with that one, I'll just say, 不好，多中国人来说，你为什么这么想？ For anyone that speaks Chinese will know what I just said. All right, everybody, thank you so much for listening. Ty, thanks for all the announcements. And that means that we will be able to do a lot more of these shows, which I'm excited about. All right, Ty.
Great. Thank you all very much. And again, just go to our website if you are interested in any of the things that we were talking about, lucidfunds.com, and fill out a submission. And that will not obligate you for anything other than receiving information. So thank you very much.
Hi, everybody. Tajen, Maslema, Shukran. I don't know. Hasta luego. Gracias.